Abbvie Stock, ticker symbol ABBV. This stock is up roughly 8% year to date, which is pretty good versus the overall market, because the S&P 500 is down 20% year to date, so that's quite a difference. Abbvie presented quarterly report on the 28th of October, where they beat on EPS normalized, but missed on EPS GAAP and revenue. So what happened, and is Abbvie stock still a buy? Well, in this video I'm going to show you real quickly what Abbvie does and the earnings, the historical returns, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about the stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Abbvie is a pharmaceutical company with a strong exposure to immunology and oncology. The firm's top drug is Humira, and this was also a hot topic in the earnings report. So if we dive in the earnings report, we'll see that Abbvie reported an EPS of $2.21 on a GAAP basis, which is an increase of 24%. Diluted EPS of $3.66, an increase of 29%. Net revenue of $14.8 billion, an increase of only 3.3%. Immunology portfolio reported $7.6 billion, an increase of 14.6%, which is pretty good. Humira US reported $4.9 billion, an increase of 7.4%, but Humira International reported $603 million, a decrease of 25% due to biosimilar competition. Hematologic oncology portfolio reported $1.6 billion, a decrease of 11%, and neuroscience portfolio reported $1.6 billion, an increase of 6.7%. Aesthetics portfolio reported $1.3 billion, an increase of 4%. Abbvie also confirms midpoint diluted EPS guidance range and narrows range from 13.76 to 13.96 to 13.84 to $13.88. They also announced a 5% dividend increase, which is very nice. The last thing that I want to show is Humira, the top drug, is still growing, but of course not in high amounts. Most drugs are decreasing year over year, which concerns me a bit. But keep in mind that these are very small in revenue share, and that next to Humira, Abbvie has two new potential top drugs, Skyrizi and Rinvoq, both growing in high amounts, 53 to 75% year over year. Overall, pretty interesting earnings with some things to keep an eye on. Next up are the historical returns of Abbvie. I decided to include the S&P 500 as a benchmark, since this is one of the easiest ways to invest. Just buy an S&P 500 ETF and wait. Next to that I added Amgen and Gilead Science. On the 5-year chart we see that Abbvie had the highest return including dividends, 98%, which is pretty good since the S&P 500 returned 63%. Amgen returned 79% and Gilead returned 28%. On the 1-year chart, Abbvie also did very well with a 31% return versus the S&P 500 returning minus 15%. Amgen returned almost 34% and Gilead returned 26%. On the 6-month chart, all stocks again beaten the S&P 500. But Abbvie returned only 1%. Gilead returned the most with almost 37%. On the 1-month chart, all stocks again beaten the S&P 500, but Abbvie only by a small margin. So Abbvie did pretty good on the 5-year chart, but most recently it performed almost similar to the S&P 500. So what does this mean? Is Abbvie stock still a buy? Let's check the fundamentals of the stock to see its valuation. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. Abbvie is a $259 billion market cap company with a PE ratio of 20, which could indicate that they are fairly valued right now. But of course there are more fundamentals that will tell us whether or not this stock is undervalued or overvalued. Later in this video I will show you my 3 price targets for Abbvie, so make sure to watch until the end. Trailing 12-month revenue is at $57 billion. In this graph we see that revenue is increasing really nice and steady over a longer period of time. And since the lockdown periods, revenue skyrocketed. When things seem to cool down, the revenue slowed down as well. So this is something to keep your eye on. Net income is at 12.6 billion, which gives us a profit margin of 22%, which is very nice of course, especially since it's above the 5-year average of 17.5%. EPS is going up and down a lot, which is something that I don't like of course. I want to see a steady and consistent pattern here, so definitely keep an eye on this one. Price to sale is too high in general right now. You want this number below 2. But keep in mind that companies like Abbvie tend to have a higher price to sales ratio. Nevertheless, keep an eye on this number, especially since it's increasing. And it's the same story with the price to book ratio. It's increasing and it's already too high in my opinion. Price to free cash flow is pretty good at current levels, so I do like this a lot. You want this number below 20, but it can be different per company or industry of course. Next up are the analysis expectations for the coming years, and this is something that worries me a bit. It's expected that EPS and revenue will decrease in the coming years according to the analysts, so we have to count this in with the price targets at the end of this video. In my opinion, they will grow in EPS and revenue, especially because of the new top drugs. Next up is return on assets, sitting at 10.9%, which is above my 10% minimum. So this looks all good to me. And it's the same story with the return on equity. And the most important number here, return on invested capital, is at 19.7%, which is something that I really like, especially since it's above the 5-year average of 14%. So Abbvie really knows how to invest our money. Current ratio is at 0.84, which is really good. I want this number below 2, and in some cases even below 1.5. So Abbvie is doing a great job here. Another thing that I think is very interesting is the debt to cash ratio. Right now Abbvie has roughly 22 billion in cash while debt is at 73 billion. I prefer companies who can pay down at least a third of the total debt, which isn't the case right now. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends, do acquisitions, research and development and a lot of things. And in this graph we see that free cash flow is growing very nice and steady over a longer period of time. So I really like this number. But another thing that I don't like are the shares outstanding, which has increased a lot lately. And this will decrease your ownership in the company, but it also makes it more difficult to sustain and increase the dividends since total dividends paid is going up. And since we're talking about dividends anyway, Abbvie has a 4% dividend yield and an annual payout of $5.92 a share. So this is a pretty high dividend yield, which of course can be very interesting. Payout ratio is at almost 42%, which is below my 50% target. So this looks all good to me. They have roughly 58% left in cash to pay down debt, buy back shares and a lot of things. The 5-year growth rate is at 17%, which is very nice, and they grew the dividends for 9 years in a row, which is also pretty decent. Overall, a great dividend scorecard in my opinion. And now we have come to the point to see if Abbvie Stock is a buy. So let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. And this is a big change versus my last video and price target, since I have to take in account that analysts are expecting no revenue growth in the coming years. So I'm filling in 0, 4 and 8% for the revenue growth. Margins are pretty steady, which is very nice, so I'm filling in 18, 20 and 22%. It's the same story with the free cash flow margin, so I'm filling in 34, 36 and 38%. PE ratio is at 20 right now, which is too high in my opinion for a slow growing company that Abbvie has become. So I'm filling in 15, 16 and 17. It's the same story with the price to free cash flow. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now Abbvie is at $147. I hit analyze and we see only a few green numbers compared to my last video on Abbvie 3 months ago. We have a low price target of $59 to $111, which is quite a big drop. A mid price target of $90 to $162 and a high price target of $137 to $237. So based on earnings value, this stock is overvalued. But based on free cash flow, they might be an interesting stock. In my opinion, the mid-price target is the most justified here. So that means a $90 to $162 range, which is still a big range. And right now, Abbvie is leaning a bit to the high side here. My final conclusion on this stock is that I really like the company, but with revenue slowing down, the price target has changed a lot. So definitely keep an eye on that number, and it's the same story with the EPS. For now, I will hold my shares and keep collecting the dividends. And this is the exact reason why it's very important to check a stock from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.